Hey everybody, it's Tortoise Investing coming at you today with you have some uncertainty in the markets. You don't know what's going on, what's happening, things going up, down, all around. 15% gains and drops with certain stocks in a day. Might not be a bad idea to look at ETFs. Now, we've got a lot going on in the markets right now. Some of the biggest news, Warren Buffett sold almost 50% of his stake in Apple. He is hoarding cash, and I know that this has a lot of people wondering, if this guy is selling and building up cash more and more, what's coming? What's going to come next? What's happening? What's going on with things? Well, the Feds have basically almost guaranteed a rate cut next month. So what's going to happen between now and then? I don't know. But we're going to be taking a look at some ETFs I think would be great for any portfolio. None of this financial advice, always doing research for investing. And if you're new, hit that subscribe button for me. Drop a like down below and let me know, do you own any ETFs? Are you buying any ETFs? Are you hoarding cash? I'd love to hear from you. Let's talk about it. Helps the video out a ton and helps the channel tremendously, and I can't thank you enough for that. But yeah, we are looking at pretty much a guaranteed rate cut in September. Come November, it looks like possibly 2 more additional cuts. And by December, there's a chance we go from 5.25 down to 4. It's nuts. Things have been crazy. We're going to have 6 or 7 cuts starting in June. Well, it's August. We haven't gotten any cuts. And then we went from, I don't know if we're going to have any cuts. And then unemployment slowly creeping up just a little bit here and there. And now it's like, now we're going to have cuts again. So if you're the type that just wants to sit it, forget it, invest a little bit here and there when you can, let it ride out 15, 20 years, you don't have time to, research stuff, might not be a bad idea to look at some ETFs. Now, let's take a look at S&P over last month. It's been pretty everywhere. We've been down 7% and up 7% in the course of just the last month. NASDAQ's probably going to be a very similar situation, down 9% and up 8.84%. So with that going on, a lot of craziness going on. I mean, over the last 5 years, as you see, these have been doing very well. And if you have a long-term mindset when you invest, it will help you through these hard times. When things are dropping, you're not panicking. You're not going, oh my God, my portfolio is losing money. You're going, oh my God, I can buy more for less. And that's the proper mindset to have. Now, the 3 ETFs that come to mind, again, I'm not saying to buy these. You're going to make a million billions, but VOO is definitely like the benchmark that people try to beat. This is all reliable. It's got 504 total holdings. It's got a really cheap expense ratio of 0.03. So that is almost nothing, honestly. It was at $3 for every 10,000 invested, if I'm mathing correctly. But as you see here, it has been doing very well year to date. Let's take a look at what makes VOO tick. So here is the sectors by weight. And you can kind of see very tech heavy. Technology is the future. It's just how it is. Yeah, very tech heavy. We'll take a look here at the top 10 list. When was this updated? 7/31. So it's as of July 31st. We got Apple at 6.89%, Microsoft at 6.7%, Nvidia at 6.2%, Amazon 3.69%, Facebook 2.24%, Google ANC makes up about 4%, Berkshire 1.71%, Broadcom 1.51%, and Tesla at 1.39. So yes, you can see very, very tech heavy. But again, this is the all reliable. This is like what fund managers and stuff try to beat. They try to have, when you think of market beating returns, you're wanting to beat this. And, if you can't beat them, join them type thing. But this would be one that I would definitely look into if I was looking to just buy ETFs or if you were unsure what to buy. Stock ticker VOO. Next up was BQQQM. It's Invesco NASDAQ 100 ETF. You're going to hear some very similar names. We got Apple 9.03, Microsoft 8.2, NVIDIA 7.92, Broadcom 5.21, Adobe at 1.68, AMD at 1.61. Was it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? Cisco at 1.32, Qualcomm 1.31, Texas Instrument 1.24, and Intuit 1.23. So pretty strong little. Is that the top 10 or is that by sector? That might be. That's by sector. Oh my gosh, I'm silly. Silly me. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. My bad. This is the top 10. That was updated by sector. Apple, Microsoft, NVIDIA, Broadcom, Meta, Amazon, Tesla, Costco, Alphabet, A, and B. And there's percentages there. I won't just bombard you with the percentages in the fun over and over again. But a very strong top 10. Honestly, the top 10 from a while ago was pretty good too. But this one, you also got Costco thrown in there, which I love. Costco is so strong. Such a great moat-heavy business, and I love moat-heavy businesses. But, I mean, as you've seen there when it was by sector, information tech makes up 51.2%. That's a lot. But again, tech's the future. So, again, can't beat them, join them type thing. But this would be a good one too, especially if you are a very strong believer in tech, in the future of tech. This wouldn't be a bad one to have. There's nothing wrong with DCAing into these. Again, that's not financial advice. I'm not telling you to go do it, but if I didn't know what else to buy and I didn't want my money just sitting there, I would definitely just DCA into some ETFs, and if there's a market correction or drop 10, 20, 30%, just keep on buying. Next up is SCHD. This is everybody's little dividend baby. This is as of the 13th. Yeah, this is the one that everyone loves. We got Lockheed Martin here at 4.66, AbbVie at 4.47, Coca-Cola 4.15, BlackRock 4.13, Home Depot 4.07, Amgen 4.05, Bristol Myers 3.95, Pepsi 3.84, Verizon 3.8, and Texas Instrument at 3.8. And I think it's 1, 2, 3, 4, 5, 6, 7, 8, 9. That was the top 10. Now, I don't like some of these. I think it's a little heavier in the healthcare. But when it comes to ETFs for dividend investors, I know a lot of people love SCHD. Another popular one is DGRO. This is another one that a lot of people love. It's a little more tech heavy. Not as much in the dividend department, because I think SCHD is over 4% at this point, I'm wanting to say. But another one that's very popular that people like is DGRO. I think it's above 2% on its dividend yield. So many numbers. I just want to know what your holdings are, sir. There we go. JP Morgan, Exxon, Johnson Johnson, Apple, AbbVie, Microsoft, Chevron, Broadcom, Procter & Gamble, and Home Depot. And again, right there is your weights. So I'm not just bombarding you with a ton of more numbers. But this is another one to possibly look into as well. And there are a bunch of ETFs out there. There are so many different ETFs. There's an ETF for everything. If you want to just go a certain sector, that's something that you can also do if you're like a big believer. So, consumers going to be doing good. There's consumer ETFs. There's bank ETFs, financial ETFs. Pretty much anything for everything that you can imagine. But, if you're uncertain right now what to buy, if you don't want your money just sitting there, just, wasting away, look at this over the long run. It goes up. If it drops, don't sell. Don't sell out. I'm not saying, again, not a financial advisor, but my personal opinion is I would not sell. I would buy more if things drop. And do I think that the S&P 500 is going to be where it is by the end of the year? Who knows? I don't. It might be. It might be higher. It might be lower. It could drop 20% tomorrow. But that uncertainty is something that you should not be completely afraid of. Be aware of it. But dollar cost averaging is such a strong way of investing. And I'm a big believer in it. But yeah, 3 ETFs, 4 really, that you can take a look at and see if they might fit your own portfolio. I'd greatly appreciate it if you'd hit the like button again. Sub if you're new. And until next time, hope everyone takes care. See yous.